Clients are asking us what is the difference between generic and specific AI. We found a gap between what is able to work in production of a bank and deliver value, and what is a generic agent able to do when you would be using something like ChatGPT. The true gap is the reliability, the scalability, the ability to deliver return on investment for a bank, for example. We knew that with the generic agents, we need to run the system multiple times on the same task. Run it 10 times, run it 20 times. The problem is that with the generic agent, it will give you 20 different responses. With the specialized system that breaks down the problem into lots of small pieces, every single piece can be tested individually, like retrieving of the data, putting together the data about net income, for example.
Our guest today in Innovation League studio is Dalibor Hlava, Chief AI Officer at Galytix.
Hello.
Our today's topic is that banks are pouring investment into AI. 88% of enterprises now use it in at least one function, but fewer than 10% have scaled it to deliver tangible value. So, Dalibor, welcome at the studio.
Thank you very much for having me.
You have just published a piece arguing that generic AI agents will stall in credit. But you didn't just argue it, you also tested it. So please explain us what you actually did and what you found.
Mm-hmm. Yeah, so thank you for having me. So we wrote this piece lately because clients are asking us what is the difference between generic and specific AI. Mm-hmm. And we tested generic agents against specialized digital credit officers, which we are developing. And we found a gap between what is able to work in production of a bank and deliver value, and what is a generic agent able to do when you would be using something like ChatGPT or Copilot. So we found that intelligence is not the true gap, as people would maybe think. The true gap is the reliability, the scalability, the ability to deliver return on investment for a bank, for example. And we've run this very big benchmarking exercise that scaled across more than 200 credit memorandums, lots of question and answers fired against the agent, both on the generic side and on the specific digital credit officer side. And we were using systems like Microsoft Copilot, for example, or Claude Cowork, nowadays very popular generic agent. And we've defined not just the intelligence angle, because, as I said, the gap is not the intelligence, but also dimensions that are required for agent to run in production. So those are things like reasoning, hallucination resistance, reliability, explainability, standardization, and auditability. So we've put together this framework with these 6 dimensions and defined for each a sort of a green zone, amber zone, and red zone, which corresponds to how much it is able to operate in a regulated bank environment, for example. And on the reasoning depth, all the systems were performing in the green zone. Very, very well systems, very, very, very good systems that are able to reason. There's no question about that. But on the reliability, explainability, and pretty much all of the other dimensions, the results were clustered in amber and red. So it's not about intelligence itself, it's about the architecture that allows it to run there.
We will talk about that, but in the mentioned article, you make a sharp distinction between what you call the human objective and the system objective.
Yeah.
Can you please unpack that?
Mm-hmm. Yeah, so generic agents, they optimize for helping one person to be more productive, right? So if I use ChatGPT, I can make myself significantly more productive in my daily job. But bank bank needs something that is repeatable and that is possible to put into production to deliver that return on investment, right? Because it's not just good enough at that point to work 9 out of 10 times, and we will touch about that later. But it's that something that operates across all of those green zones that in that framework that we've established, that allow it to run in production and be reliable enough to be in delivering that value, basically. Yeah, so productivity tools are not automatically able to be put into production systems. It really depends on what you're optimizing, if it's individual or the bank.
Okay. You describe 5 specific structural weaknesses that emerged from the benchmarking. Maybe tell us which one did you surprise the most?
So what surprised me the most is how the small failures compound over longer workflows, right? So for example, imagine that you have something that is 90% reliable, right? Works 9 out of 10 times.
Okay.
Seems quite good, right? But then if you compound it over 5 steps, 1, 2, 3, 4, 5, and each of them is 90% reliable, the whole system end to end becomes only 59% reliable. It's 0.9 power to the power of 5. And 90% sounds kind of okay, but 60% that's already like probably not good enough. And then the longer the workflow is, the more it decays, obviously, right? So with 10 steps, it goes down to 35%. And a 10-step workflow, if you imagine a bank, it is not really that unusual, right? It's actually quite common to have more than 10 steps, and at that point, 90% system is basically useless, right? You would not be able to run it. You need to really go into high 9s, 99.99, and even there, right? You need to be very close to 100. And the other weaknesses were basically hallucinations still happen, right? Hallucinations in the benchmarking, we were not able to get it under 3 to 6%, basically. However we wanted with the generic systems. With the specialized systems, which structure problem differently, we were able to drive it all the way down to 0, essentially, on the sample that we worked on. But here we couldn't. The same was with problems like structure and methodology drift. So, because we know how these systems work, we knew that with the generic agents, we need to run the system multiple times on the same task. Run it 10 times, run it 20 times. The problem is that with the generic agent, it will give you 20 different responses. Not necessarily wrong. It's just that the emphasis is different, for example, right? Or sometimes it notices that the driver of the net income. Sometimes it emphasizes more the cost structure, for example. It's not wrong, because if we ask 20 people to write the memo, 20 different people to write the same memo, they will also write 20 different memos, essentially. But with the production system, we needed to be consistent. We need to know what we can expect out of it, right? Okay. And again, that's where the specialized system starts to shine very much. And to follow up, what is the takeaway from this is, like, these are not the problems with the generic agents are not bugs. It's not something that you can fix. It's more a design consequence, how it works, rather than something that can be fixed. So in order to fix it, you need to completely overhaul the architecture and choose a different solution, like a specialized system.
Of course, we will talk about that. But you say that common response is just put a human in the loop, and you also tested it. What happened?
Yeah, we keep hearing that a lot. Basically, everybody says we just put human in the loop and it fixes everything. But it does help, but it does not solve the production readiness, or it doesn't allow it to scale. And let me explain why. Basically, when you have a long report or long memorandum that you ask a human to check, it's a very difficult job, right? Basically, what people were telling us when we were doing the benchmarking exercise, they were telling us that it would actually be easier for them to write it from the scratch rather than spend all the time checking every single individual claim in the report, because you have to follow someone else's train of thought, and it doesn't really connect, and every single piece of thing that you are checking is an individual task, whereas when you think about writing a memorandum, it sort of forms in your head, and you naturally follow from one step to the other. When you're reviewing the sources, you go through it very naturally. And so basically the point here is that you can put him in the loop. It catches some of the judgment errors, the hallucinations, but it doesn't save time. You're back where you started, basically.
Okay.
And even if you were able to do it, you would still not fix the reproducibility, for example. It will still be the different memos every time. You wouldn't fix the lineage. So the generic systems are not very good at explaining where they took the number from, for example. So a human would still need to put it back. It's an additional work. And all of this basically scales with volume. So if you will need to ramp up the production of the reports by 5 times, you will need 5 times more people. And you're essentially back where you started, not very a system that generates the value that you expected it at first.
So if prompting harder doesn't work, what does? And also, of course, human review doesn't close the gap. So what does? I know that you introduced the concept of problem structuring. So if you could explain it like I am CRO, not an engineer.
Yeah. So the problem structuring means decomposing the credit workflow in our case into governed steps instead of asking the agent to improvise, to do its best job. So for example, on the improvisation would be a question or a task for an agent: give me credit memorandum of, for example, Microsoft, right? It would try to do its best. It would go into the internet, try to search some sources, would try to maybe find some examples, or I would provide examples as part of the prompt, and then basically it would try to improvise in creation of that report. But the specific system, the digital credit officer, thinks of this very, very differently. It follows a known patterns that because the system was built for generating credit memorandums, it has these tools and patterns that allow it to just organize the work and execute only valid steps at every single part of the pipeline. And this allows it to not drift away, so it will not go on a tangent, which happens with generic AI. It will follow the methodology of the bank. It will also verify all of its sources, because that's how it's programmed in the pipeline. And allows the vendor who develops such a credit officer to actually test all of these individual pieces on their own. So when you have a general agent, you have task for generating memorandum, and on the other end you have the memorandum itself. So you have to test, generate credit memorandum and the final result.
Okay.
A lot of steps happening in between, right? With the specialized system that breaks down the problem into lots of small pieces, every single piece can be tested individually, like retrieving of the data, putting together the data about net income, for example, the way how it verifies its own claims. All of those pieces individually can be and are in our case tested, which brings us to these high nines of reliability, basically. So. So this basically turns it into engineered quality instead of just hoping for the best.
Týden inovací, jedna z nejvýznamnějších tuzemských událostí v oblasti inovací, převratných technologií a umělé inteligence, v roce 2025 oslavil už 10. výročí existence. Každoroční svátek všech inovátorů a nadšenců přelomových řešení pravidelně na jednom místě prezentuje okolo 300 skvělých řečníků, ať už jde o špičky tuzemské inovační scény nebo výjimečné osobnosti ze zahraničí. Dále desítky diskuzních panelů, inovativních nápadů a technologií z různých oborů, inspirativní semináře nebo projekty zaměřené na podporu startupů a žen podnikatelek. Zapište si už teď. 11. ročník týdne inovací proběhne 1. a 2. října 2026.
There is maybe something like common pushback, are in platforms like LangChain, Crew AI already adding structure and tool constraints to generic AI? Isn't the line blurring? And related, won't ChatGPT 5 or Claude 4 just solve these problems?
Yeah, that's a natural question, and tools and better models definitely do help, but they especially help for that personal angle, for that making it better at doing the generic work. But on the specialized angle, they do not really erase this architectural gap, the difference between the two systems. They do not make it better testable, for example, as I was just commenting on. They do not really reduce the errors on going on a tangent. It will still be happening, and basically there is nothing that can be done because it's a different architecture of the system.
Okay.
But on the flip side, though, better models will actually make the custom solution better by itself, right? Because when you have the problem structured, you still use the generative AI, but you only use it where it's unavoidable, where there is no better solution how to solve such a problem. And then when you have a generational leap from ChatGPT 3 to 4 or from 4 to 5, you realize all those benefits in there because the reasoning will be better. The number of steps that it's able to infer in its logical reasoning. So, for example, why has the net income increased? Net income increased because of this. But then the natural question is why this increased then, right? And then there might be 3 or other sources of that. And each of those can have multiple other sources. So the depth of how long it can go, how deep it can go in the system, that's where the benefit shows when the model is improved. Okay. But it doesn't close the architectural gap, and the governance basically cannot be solved by the model scaling alone.
You also describe risk-return frontier for AI in banking. 3 archetypes. Can you explain what you mean?
Yeah, so we thought of this analogy about risk-return frontier because basically we noticed that more autonomy gives deeper reasoning, but also more risk.
Okay.
Right. Whereas where you constrain it more, you get safety, but you lose some of the usefulness. Right, and basically that's where we noticed that there are these 3 archetypes that we would work with. It's on one hand you have the generic agent that's unconstrained. You basically give it tools and ask it to go and do its job, but then sometimes it fails, sometimes it goes on a tangent, sometimes it hallucinates. You just don't know what's going to happen, and you get the flexibility, but you get the risk. On the very far other end, you have something like a templated system where there is very little leeway, almost no ability to make decisions for the system itself, but it's super safe, right? It never fails, but it also never surprises you with a good result. It's just what it is. It's just basically filled in a template, for example, right? Like, you know, the net income of this company was, and then there is a variable, and the system just goes in and fills in the variable, right? So that's how some of the systems used to work before generative AI era. But that's also not good, right? Because you're losing a lot of the power of the generative AI. So the last archetype on which we've built our digital credit officer is obviously somewhere in the middle. Basically, finding that right balance between the autonomy and the error rate that it has, and it goes back to the framework that we've established with the green zone. We made sure to basically set this boundary so that it basically stays in the green zone on all of the 6 dimensions in the framework of assessments. And basically, why we call it the risk return frontier is because this is a well-known economic term that basically when you want to save safe, like for example a savings account, you will probably get a relatively low interest, right? Whereas where you go and make risky investments, sometimes it works out, and sometimes you make a lot, but sometimes you lose everything. And we saw that this is basically very, very analogous to that.
And for a bank that's convinced by your argument, where do they start and how they decide whether to build, buy, or partner?
Yeah, I would say from what I've seen in the past when we were working with clients, it needs to start with the workflow itself. Where basically they think of some high volume credit workflow where there is a measurable cost and it's repeatable work, it's well defined, and it can be put through a digital credit officer's workflow, can be executed by digital credit workflow. Needs to be then followed with data. That's basically unavoidable, and a lot of our clients are stressing out this point that they are afraid that basically their data are not good enough to work with the system, or they know that they have a lot of legacy systems, data scattered, and sometimes even unclean and containing some errors. So the data need to follow next, right? And then the third is pick how to build the AI system on top of this selected workflow with the clean data, right? And then you have 3 options. Naturally, you can either build yourself, you can buy it from someone off the shelf, or you can partner with some company to help you develop that. Where with build, basically you need to have a lot of talent and experience already inside, and not all of those banks will have talent in existing talent already in AI, in software, in data, and ideally also some experience with past cases, which is difficult because this is relatively new space, obviously. On the buy, the angle is that you buy something off the shelf that you know how it works, and there are not many systems actually. It's just only now emerging, but you know how it works, but then you sort of lose much of the flexibility to tailor it to your use cases. It can work with some more retail approaches, but with banks typically they need to have custom methodologies, custom handling of specific steps. Rarely would off-the-shelf product work. So our view is that the best way is to partner because you get best of both worlds, where you get the talent from someone who already has the experience and the know-how how to build it, but is able to also partner with the internal department of the bank, with the risk teams, with IT teams to basically tailor it to their specific use cases. We think that this is basically the way to go. Maybe in the future this will change, but for now, this area being so new, I think it's the best approach.
Okay. Tell me please, where does it go? Because you describe a future landscape of specialized digital officers like credit, risk, relationship management. Is this the new org chart for banking AI?
It's a good question. We think that the future is basically a network of specialized digital officers, not one universal super agent, because I've been following this AI space since the beginning, right? And 1, 2, 3 years back, people were thinking that one super agent is going to solve everything. And now we're seeing that when we've moved past this POC phase where people were building things in 24 hours and everybody was clapping how amazing the progress is and how flashy the demo looks, 1 year later the thing is still in that state. It hasn't moved very much, and people are just scratching their heads how to put this into production, and they start to realize that they might not even be able to do that. It's not just a matter of time, it's that problem structuring, the architecture gap that basically prevents it from production, from being deployed to production. We see that basically these specialized agents built with the combination of the generic AI skills and abilities, but the specific problem solving, we call them blueprints, that allow them to execute the workflow very reliably, will basically be able to realize that ROI that people are so naturally looking after in the institutional investments. So you would have a credit digital officer, you would have a risk manager, you would have a compliance officer, right? Each built specifically for that case, and they would basically work against together with each other, executing some workflow. And humans would basically only execute the exceptions. These systems, because they know what they can do, they also by implication know what they cannot do. So basically when they encounter something that's not covered by their playbook, by their blueprints, they would make an exception and say this needs to be handled by a human. But this is very different from putting a generic human in the loop into the system, because here you're only handling the exceptions. And also if you scale up and you ramp up the volume by 10 times, if some exception starts to happen more often, you build it into the system, so it's no longer an exception, right? So humans are genuinely only solving those exceptional cases that don't scale linearly. It's always going to be this small number of cases, and that's where you realize the true return on investment. So the question is not whether to use AI, but it's more really how to use it.
And I'd like you to tell if a CRO is watching this and they take away one thing, what it should be.
I think it's that the winning systems will not be the ones that are the smartest, right? I think it's the ones that are going to be defendable in production, the ones that actually survive the audit. And we've seen this quite a lot with basically flashy demos that, CRO is captured by the demo. Sometimes the demo would even run on a video because you wouldn't trust it to run live in front of a client. And they would be like, this is very smart. I love this. But again, this is it defensible? When audit comes, are they able to explain why they signed off some credit decision? I'll leave that question to them. To me, this is basically this different architecture required to operate completely differently. Still use AI, but in a different way.
Okay, Dalibor, thank you very much for the interview. Thank you.
Thank you very much for having me.